Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Bersachi, and these are the stories that set your agenda. Giving thanks. Global stocks gain for a fifth session, all but erasing November's losses ahead of the U.S. holiday. Bitcoin bounces above 90,000. UK assets rally after the Chancellor delivers a tax-raising budget that broadly satisfies investors but offers little on economic growth. We'll bring you our interview with Rachel Reeves this hour. And in Hong Kong, police make multiple arrests after the worst residential fire in more than half a century kills at least 44 people. Hundreds remain missing. Well, good morning again. And if you're just joining us, a reminder that today is Thanksgiving. So we're going to see lighter volumes than usual. Also a reminder that cash, equity and bond markets are closed for trading, but U.S. futures are open. So let's take a look at how things are opening up this morning. Moderately positive. European markets up about 5 basis points. The FTSE dipping a little bit today, down 0.1%. The market obviously digesting that budget. So we're going to spend a lot of time on this show analyzing what we learned from the Chancellor yesterday. But today, FTSE 100 futures leaning towards the red. S&P and Nasdaq moderately positive after a better session yesterday. But broadly speaking, what we are seeing is a risk-on rally this week. And the MSCI All-Country World Index has almost erased all of its losses for November so far. So we are slowly coming back on expectations of that interest rate cut by the Fed in December. Switching over, let's take a look at some of the cross-asset indicators as well. We are seeing a positive handover from Asia Pacific. We'll get into some of the price action there shortly, but up 0.4%, as you can see on the screens. The pound also holding on to some of those gains that we saw post the budgets yesterday. 132.60 is where we're at, though pulling back from some of the earlier strength we saw in the session. Now up about 15 basis points, up almost a full point from prior to the budget yesterday afternoon. And then gold, we have slipping a little bit this morning, down 0.3%, but still above 4,100 here. And Bitcoin has been one of those indicators that has really recovered the last couple of days in line with the broader risk-on sentiment, now scaling above $91,000, about 1% firmer on the session. As I mentioned, global equities are close to erasing their November losses, fueled by growing optimism over that Fed rate cut in December. For more, let's bring in our executive editor for Asian markets, Paul Dobson. Maybe let's just start with the handover from Asia today. A lot of green on the screen this morning. What's the catalyst?
Yeah, good morning, Jemana. The funny thing is not really any particularly new catalyst, just more of that recovery story. We're seeing that big bounce from all of the volatility that we had earlier in this month. And as you said, close on the global equity index, at least, to erasing all of the losses that we've seen through the month. So that's a pretty good and positive backdrop, at least. On top of that, you've got people adding to their bets that the Fed is going to start or continue cutting rates in December, taking a little bit of the pressure out of markets. It's weakening the dollar, and so that in turn is helping to give Asia's markets a little bit more of an uplift as well. But I think that, sort of like if you're looking forwards rather than looking backwards, if we do manage to kind of turn out a positive month after all of the volatility that we've had, you could imagine that the market is going to start believing in the Santa rally after all. Normally at about this time of year, the market is positive and continues to rally towards Christmas time. And so, hence it gets its nickname. And so if we do start to feel that we're getting a bit of a positive momentum build, then maybe more people will join in the ride and continue on that sort of a story into the end of the year.
Of course, we're getting into holiday season. We definitely should be talking about the Santa rally. There's one also major development overnight. I thought it was interesting that JPMorgan flipped their forecast now, and they actually do see a Fed interest rate cut come next month. Was that a surprise at all?
I think it was quite surprising that they flip-flopped so quickly. It was only kind of at the end of last week where they said, hang on a second, maybe the Fed isn't going to cut until January. But they were convinced by the rhetoric from the likes of Williams and from Mary Daly, from Waller, who all had the sort of opportunity to speak before we went into the blackout period for the Fed, all of them talking about the idea that they see scope for a cut in December or in the near future in any case. So the market switched back to 80% odds. Therefore, JPMorgan reading the tea leaves executives think the same thing, most likely. But the most recent data updates that we've got kind of have been reinforcing that point as well. The Fed has the dual mandate. It has to worry about inflation, which has been sticky, but it also has to keep an eye on the labour market and kind of the spending conditions as well. And there we're seeing more weakness. And if you look at the Fed's beige book, which we got in the US session yesterday, Bloomberg Economics sees that as being a kind of clincher for another cut in December. And what they see in that report is a weakening of the labour market in several of the areas. Inflation, yes, remaining higher than is desirable, but not any changes really in that picture. And then this continuing narrative about the poorer sections of society not really spending and really struggling. And the Fed seems to be paying a little bit more attention to that. And therefore, probably a cut makes sense in order to ease that burden on those sections of society.
Paul, thank you so much. Bloomberg's Paul Dobson. Well, UK Chancellor Rachel Reeves did enough in her budget to help her and Prime Minister Keir Starmer survive, with markets also responding positively. Reeves boosted her fiscal buffer to £22 billion, with tax rises totaling £26 billion. Documents from the official forecaster showed continued spending pressures, particularly on welfare. Well, the Chancellor spoke with us about the need to raise tax revenue to help support future economic growth.
Last year, I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecasts around productivity, and they are very clear that's nothing to do with the policy of this government. But that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Well, for more on the budget, I'm joined now by Kit Rees, co-editor of Bloomberg Markets Today. Well, people are calling this a spend now, tax later budget. Talk us through the main features of the Chancellor's second budget.
Well, Jemana, after weeks of very chaotic signalling and U-turns, what we got was a budget which was very much in line with expectations. So it's very much taxing wealth and also spending on benefits and tackling the cost of living. So one thing which really cheered markets was that the Chancellor managed to secure the biggest headroom since March 2022. So this was a fiscal buffer of £22 billion, higher than the £15 billion which was expected, and this was taken very well by markets. But getting down into the policies themselves, one of the ways the Chancellor is going to be raising revenue is by keeping income tax thresholds frozen for a further 3 years. So this is one of those kind of stealth measures that raises money for the government. But in terms of the giveaways, they removed the two-child benefit cap, and they're also raising the minimum wage. But one of the kind of issues that's come out is that a lot of these tax measures are going to be very backloaded, meaning that they're going to come into force in later years. So this has been kind of raising questions over, the kind of the growth and the credibility of the budget. And also the OBR did revise down its growth forecast. So in terms of whether this is a budget that's going to stimulate growth for the economy, it's kind of the jury is out on that one.
Yeah, you mentioned the OBR, Britain's Office for Budget and Responsibility. I should say that they apologized and launched an investigation after an unprecedented early release of its budget documents.
Yes.
Let me start with an apology. A link to our economic and fiscal outlook document went live on our website too early this morning and was subsequently removed. We apologise to the Chancellor, members of Parliament for this technical error and have initiated an investigation into how this happened. It'll be reporting to our Oversight Board, the Treasury and the Commons Treasury Committee on how this happened and how to make sure it doesn't happen again.
Yeah, Kit, I guess, the question is, what are the ramifications of this early OBR release?
Yeah, so this was probably the most dramatic part of the whole budget day yesterday, and it definitely sent markets into a tailspin. In terms of the ramifications, questions will be asked over the credibility of the OBR. There have been questions about other institutions such as the ONS, which has been grappling with questions over its data quality and also over the Bank of England's messaging too. So it's very unhelpful, and we'll have to see what happens and what the investigation yields. But overall, it kind of mars the credibility of the OBR, and it just isn't very helpful.
Kit, thank you so much. Kit Rees, co-editor of Bloomberg Markets Today. Well, let's get the market view now. Bloomberg's MLive cross-asset strategist Venram says Britain's widening fiscal buffer will save gilts from some of the worst outcomes that traders may have imagined before the budget. Ven joins us now. So there was a lot of drama leading into this budget, but I've got to say, judging by the price action in gilts, in equities, in the pound, pretty undramatic price action in markets afterwards.
Well, I mean, we saw quite a bit of flattening of the yield curve, the bull flattening led by the 30-year, and I think that will continue, because if you look at the 30-year part of the curve, the UK is paying about 5.3% to raise taxes at that to raise funds at that point of the curve, and if you look at Germany, it's like 200 basis points above Germany. And much of that stems from the Liz Truss days, when the markets fundamentally started questioning the credibility of UK's fiscal spending. So I think that some of that risk premium is bound to come off. So, but to what extent is the question? I think about 200 basis points is reasonable at this point. But let's see how it plays out.
Yeah, and of course the fiscal headroom was a bit of a sweetener to gilt market investors. I guess one of the other questions is what the knock-on effect is going to be to the Bank of England, because the Chancellor herself had spelled out that she wanted to come up with a budget that would bring down inflation, and yet OBR tells a different story.
Well, that is the interesting part of the report, because the OBR now sees inflation at 2.5% for 2026.
That's higher than where it was before.
That is higher than what they projected in March. Now, the question is, the markets are fairly convinced that the BOE is going to be cutting rates next month. I don't know whether the BOE is going to take as sanguine a view of the inflation dynamics, because if you look at the minimum wage, she's increased it by 4.1%, which is inconsistent with the inflation mandate. So, and if you look at the inflation break-evens, they actually rose quite, I wouldn't say dramatically, but rose quite a bit yesterday. So I think that, the jury is still out on rate cuts, and I don't think it's a given that the BOE will cut rates next month. And I think one thing is more sure is that the BOE won't be able to cut rates as much as the markets are predicting next year. I think that the terminal rate is somewhere around 350. The markets are thinking much more than that. I don't think that's happening.
Interesting. Okay, Bloomberg's MLive strategist, Venram, thank you so much. Well, the opening trades will break down the numbers with key business and political voices in its budget special this morning, starting at 7 a.m. London time. Some of the guest highlights include Amanda Tickle, Deloitte lead for global tax and trade policy, on the changes on taxes following the budget. The UK Shadow Chancellor, Mel Stride, on his reaction to the budget and the OBR leak. UK Revolut and River Global Chair Martin Gilbert on UK investments. And Jonathan Caldwell, Phones for You founder, on his thoughts following the budget. You won't want to miss any of those conversations. And just bringing you some breaking news that we're getting through from JPMorgan. They have announced the intention to build a new 3 million square foot landmark tower in London. They're saying that the new building would house up to 12,000 people. It will be the company's principal headquarters in the UK. And interestingly, the tower will be situated in Canary, Wharf. So this is just coming through from JPMorgan, doubling down on their presence in the UK. A new tower to be built in Canary Wharf that will be 3 million square feet big and will house up to 12,000 people. And let's just take a look at what's coming up later today. We are, in this show, actually going to be getting some earnings coming through. So we've got Remy Cointreau to watch out for. That's going to hit probably in the next 15 minutes or so. Later on, we're going to be taking a look at the ECB publishing account of their October rate decision. So the ECB minutes, essentially, that's at around 10 a.m. UK time. And then don't forget, of course, it is Thanksgiving today. So we are looking at cash markets for both bonds and equities that are closed, and futures markets are open but shortened holiday day, and we will get that as well tomorrow. So expect thinner volumes than usual. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, so that's DAYB Go, for some of the top stories. And today on the terminal, we're leading with the global stocks rebound, in addition to the tragedy that is unfolding in Hong Kong. And coming up, we will be talking about that. Senior figures are arrested in connection with Hong Kong's worst fire in 5 decades. All the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. At least 44 people have been killed and hundreds are still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Our China correspondent Min Lo is on the ground. Min, walk us through the latest, the situation, and whether the fire actually has been put out yet.
It's not fully under control, but it's much, much better from where I'm standing. I can see like most of the fire seems to be put out now, but we can still see black smoke billowing out from the buildings. The fire department is still firing those water jets, trying to just put out all the smolders. And it's been close to 24 hours now since the fire started yesterday afternoon. And it's been such a harrowing day. There are people who lost their lives. Currently, the death toll standing at 44, hundreds more still missing, and the legislative councillors were telling us that they received many messages from residents who are frantic to look for help to contact the loved ones that they have lost touch with. So rescue efforts still ongoing. We did see this morning some people being wheeled out on stretchers. They seem to be conscious. But yes, it's been a horrifying morning. I've been here all morning. I can feel the sting in my eyes, the scratchiness in my throat, because it's extremely smoggy here, especially when the wind blows over the smoke. But just a very devastating day for Hong Kong.
Absolutely devastating and harrowing, as you were saying. But no doubt this tragedy is going to be raising questions about construction safety and also that bamboo scaffolding that's so intrinsic to Hong Kong.
That's right. This is a housing estate. It's government-subsidized buildings that has about close to 2,000 units, and it's over 40 years old. There was heavy renovation going on, and so there were these green mesh, the scaffolding, bamboo scaffolding surrounding the buildings, and authorities said they found substandard materials that were not up to compliance standards. They found flammable materials like styrofoam boards sealing some of the windows, tarpaulin sheets, plastic cloth as well. And so they have started a criminal investigation and arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence. And residents certainly are seeking answers as to why these substandard materials were being used, what happened to the inspection, the enforcement, and I think it will really accelerate the debate about whether or not Hong Kong should be fully phasing out these bamboo scaffolding. They are really favored because they are lightweight, they are cheaper, they're easy to set up, but there has been cases in the past of the scaffolding collapsing and killing people below, of people falling from height, and of course fires have broken out in the past, but certainly this is one of the most high-profile ones in recent years.
Bloomberg's China correspondent Min Lo on the ground for us. Thank you so much for the reporting. Well, coming up, the Pentagon names several Chinese tech firms that it alleges are connected with the nation's military. We'll bring you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories making news. 2 U.S. National Guard troops have been critically wounded in a shooting just blocks from the White House. Officials say a gunman was taken into custody after another guardsman returned fire and moved in to stop him. President Trump was in Florida at the time, but has ordered an additional 500 troops deployed to the nation's capital.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
U.S. travelers have faced some early disruptions to their Thanksgiving plans after air traffic at some of the country's busiest airports was halted. The Federal Aviation Administration issued brief ground stops at LaGuardia and Newark airports, 2 of America's busiest for passenger traffic. The disruption was caused partly due to weather and ongoing staff issues. And the Pentagon is accusing major Chinese tech companies of aiding the country's military. The U.S. Department is recommending that Alibaba, Baidu, BYD and others should be added to an official list. For more, we're joined by Bloomberg's Jill Desis in Hong Kong. Jill, what would it mean for those companies to be included on this Pentagon list?
Well, Jimona, first of all, it's not entirely clear whether they've actually been formally included on this list at this point. And there's no real sort of concrete legal ramifications for being included. But I think the really important things to really note here are that this could be pretty highly detrimental in terms of dissuading U.S. investors from ultimately investing in these companies. Companies in the past that have been included on this Pentagon list sort of are at risk for reputational damage, risk of not being eligible for various U.S. government contracts, those kinds of things. So you are talking about, companies that are under consideration, at the very least, for something that could lead to some pretty significant impacts, financial impacts for these companies. And then also, obviously, that element of potentially, sort of dissuading those U.S. investors from really looking at, huge companies like BYD and Alibaba.
Yeah, I mean, they are huge companies. How have they responded, Alibaba, BYD, others, to these allegations?
So at this point, Jimana, we haven't heard from many of the companies. They haven't responded to requests for comments, but Alibaba has said there's no basis for these types of allegations. Remember, this effectively amounts to, inclusion on a list that would accuse these companies of having links to the Chinese military. You're also seeing on your screen right now the rebuke from the Chinese Foreign Ministry. So this comes directly from Beijing, saying that things that we've heard the Chinese government accuse the U.S. government of in the past, sort of over broadly defining what national security means and applying it to instances like this. So you are seeing those rebukes from, again, the Chinese government, and then also, that denial, that no basis denial that we saw from Alibaba. I mean, I think, the really important things to sort of keep in mind when you're looking at this particular instance, Jimana, is that, this recommendation did, apparently come a few weeks before that Trump-Xi meeting in South Korea. So unclear whether or not sort of those warming bilateral ties between these ones have had any impact, but obviously does indicate that there's that continued undercurrent of U.S.-China tensions at play here.
Most definitely. Bloomberg's Jill Desis in Hong Kong. Thank you. Well, Bloomberg has learned Saudi Aramco has chosen Citigroup to help arrange a potential multi-billion-dollar stake sale in its oil export and storage terminals business. The Saudi oil giant is expected to kick off a formal sale process as early as next year and is likely to see interest from large infrastructure funds. Aramco aims to raise billions of dollars from the sale as part of a broader attempt to free up cash for investments. And coming up, we speak to Chatham Financial's Jackie Bowie about the fallout from the UK autumn budget. We'll have that interview for you coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Jimana Versace, and these are the stories that set your agenda. Giving thanks, global stocks gain for a fifth session, all but erasing November's losses ahead of the U.S. holiday. Bitcoin bounces above 90,000. UK assets rally after the Chancellor delivers a tax-raising budget that broadly satisfies investors but offers little on economic growth. We'll bring you our interview with Rachel Reeves this hour. And in Hong Kong, police make multiple arrests after the worst residential fire in more than half a century kills at least 44 people. Hundreds remain missing. And I'm going to bring you some earnings that have just come through. Remy Cointreau, the spirits maker. Let me bring you the highlights over here. Well, they're saying that their first half current operating income has dropped 26% year on year, coming in at just 108.7 million. Their first half current operating margin also lower than the prior 22.2% versus 27.6% year on year. Also relevant because they have big exposure to China and the U.S. They've cut their guidance on China-U.S. conditions, but they have reaffirmed their 2025-2026 outlook. So that outlook has actually been confirmed. Shares are expected to fall on back of this guidance cut. But essentially, this is what we're getting on some of those headlines coming through from Remy Cointreau. As for broader markets, well, what we are seeing is a bit of a bounce for global equity markets. And this has been a theme over the last couple of days as investors have been quick to move ahead and think about the possibility of the Fed actually cutting in December, a bit of a Fed pivot, which is boosting market sentiment. Today, futures not doing a whole lot, but we're losing some of the ground that we saw earlier. European markets dipping a little bit now. They were green about half an hour ago. FTSE 100 also down about 15 basis points. Of course, investors there continuing to digest the budget and the impact that it's going to have on various sectors. And you can see U.S. futures not doing a whole lot. Again, it is Thanksgiving, so we are looking at thinner volumes than usual and shortened trading days for futures, and then tomorrow as well, a shortened trading day. Switching over, let's take a look at some of the other cross-asset indicators, because we did get a rather strong handover from Asia-Pacific indices today. Again, that's beginning to peter out, but still up 0.3%. China brushing off some of those concerns about the Pentagon memo. The pound also holding on to gains that we saw since yesterday. 132.50 is where we're at, up about 0.1%, almost a full point higher than where we were going into the budget. Gold also not doing a whole lot, trading sideways, down 15 basis points, but holding above that 4,150 mark. And then Bitcoin, which has been quite a pro-cyclical asset the last couple of days, has really rebounded hard in the last couple of sessions. We are now above 91,000. We got as low as about 80,000 a couple of days ago. But in line with the risk-on sentiment, we are seeing Bitcoin recover as well. But let's get more on that UK budget. The Chancellor Rachel Reeves spoke to us about the official forecaster's productivity downgrade and current legislation driving the government's growth ambitions.
Listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also we want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now, with better balance sheet management, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto? Well,
the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office of Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible, possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill, as being positive for the economy.
Well,
and indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that their OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete. Just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
That was UK Chancellor Rachel Reeves speaking with Bloomberg's Lizzie Burden in her only broadcast interview just after the autumn budget yesterday. I'm joined now by Jackie Bowie, Managing Partner and EMEA Head at Chatham Financial. Well, this always was going to be a very tricky budget for the Chancellor. She had so many different stakeholders that she had to satisfy: Labour backbenchers, of course, market participants, those bond vigilantes, and the public. Judging by the price action, she seems to have done okay. But the question, I guess, looking ahead is she actually out of the danger zone?
Yeah, I mean, I think there's just really a little bit of relief in the financial markets. There was so much leakage and speculation in the weeks running up to the budget. Also, her impromptu speech that she made a few weeks ago, trying to prepare the markets for those income tax rises, which of course didn't come through. And then, of course, the erroneous release of the OBR report, 40 minutes before she stood up in the Commons, which did obviously impact volatility in the market. So when the message was actually delivered, it was a little bit of relief that it wasn't quite as awful as maybe it had been predicted and speculated before. But, as she said in her interview, I mean, all these tax rises they're just pushed further down the road. So I don't see the fiscal position being any better than it was before she stood up.
And the thing is, this budget is being labelled a spend now, tax later budget because of the backloading of the tax rises. I mean, is there a chance that they don't actually follow through on those tax rises because they're getting closer and closer at that point to the next election?
Yeah, that's always the challenge when you're pushing that, fixing the fiscal position so far away, and it starts to get closer to when there might be another government in power. And the other thing, of course, is between now and then, lots of things can change. I mean, she mentioned about interest rates and inflation. We have another Bank of England meeting before the end of the year, and she seems to be banking on the Bank of England continuing to cut interest rates because inflation is continuing to come down. And I don't think you can 100% bet that will actually happen. The December rate cut looks to be in the bag, but whether the Bank of England will continue to cut interest rates next year is still quite a big question mark. So when you think about all of those other variables and things that might change, I suspect there will be further changes to the growth and inflation forecast. And then, to your point, whether those tax changes will actually come through as she set out yesterday is also a question mark.
Yeah, that headroom number, which is the number that many market participants were watching out for, did come as an upward surprise. I think people were sort of penciling in about 15 billion. Instead, she came out with 22 billion pounds worth of fiscal headroom. Do you think that, again, in the short run, going back to what I was saying at the beginning, that will be enough to satisfy gilt investors?
Well, you know, as we say, it's only a forecast, right? It's not in the bag, and it hangs on lots of other things coming through between now and then. And again, it's not, you know, managing to these fiscal rules just feels like engineering for an outcome. She said herself in her own interview when everyone wants to focus on the growth and what the government are doing to drive growth, and I don't think they answered that question. I mean, a few of the interesting things that came out in the budget around you know, the changes to the cash ISA allowance and also the changes to salary sacrifice for people saving for pensions. You cannot get growth in an economy without investment, and you cannot get investment without savings. And the UK is actually quite a low kind of savings rate relative to other countries, and yet the decisions that she took and the announcements she made are curtailing savings, so actually curtailing investment and potentially future growth too.
Yeah, looking at those OBR forecasts, which, as you say, you know, there was a bit of a whole drama with that because they leaked them too early. But the growth forecasts were not very helpful. They lowered their forecast for 2026 to 1.4% from 1.9%, and then lowered the medium-term productivity number, which, again, was going to be a big sign for the market as well. The Chancellor seems to think that she can beat those forecasts. She said that to our colleague Lizzie Burden. Where will the upside to growth come from?
Yeah, I mean, that productivity downgrade was a real big hit, and we've talked about it for a long time. The UK has a productivity issue. It's just even worse than we thought it was. Where the Chancellor thinks she's getting the growth from is on those supply side changes. You know, she's talked about their planning changes, she's talked about some of the trade deals, but actually they're not really moving the needle that much. I think we need to focus on the number of people in the UK who are economically inactive. So, you know, they're out of work, but they're not actively looking for work. And then just the general productivity of the people who are in work, particularly in the public sector. So all the productivity growth really comes from the private sector, and the public sector less so. She did make a little nod to that when she talked about some of the efficiency gains that she's trying to focus on in the public sector. But again, these are tiny movements. They're really not enough to dramatically change the growth picture for the UK.
Jackie, a pleasure to chat to you. Thank you so much for sharing your perspectives. Jackie Bowie, Managing Partner and EMEA Head at Chatham Financial. Now to some of the other stories making news today. The IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the nation's international allies. The two sides have agreed to a new 48-month arrangement under the Extended Fund Facility, with potential access to around $8 billion. And in corporate news, Puma shares are indicated higher on TradeGate. That says Chinese sports apparel company Anta Sports is said to be amongst the firms exploring a potential takeover of Puma. Sources say Hong Kong-listed Anta, which owns brands including Fila, has been working with an advisor to evaluate a bid for Puma. Puma shares have dropped 62% in Frankfurt this year, giving the company a market value of €2.5 billion. And coming up, we will be discussing the winners and losers from the UK budget with Harry Stebbings of 20VC, a London-based venture capital firm. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, back to our top story. UK Chancellor Rachel Reeves has announced £26 billion of tax increases in a budget that sought to satisfy the demands of both bond markets and members of her own party. But our next guest with Bloomberg's Tom McKenzie in London, the usual host of the show, says it failed to tackle anything material like rising social welfare costs. Tom, over to you.
Jemana, thank you very much indeed. Yeah, very pleased to say I'm joined by Harry Stebbings, founder of 20VC. It's a London-based venture capital firm and publisher of the popular 20VC podcast as well. Harry, fantastic to get you around the set on a day today, like today, to digest the budget, and particularly with that finger on the pulse of the UK and European ecosystem, tech ecosystem. So for you, with your lens, Harry, what are some of the standouts? What are some of the key takeaways from this UK budget?
I think it's just important to understand objectives going in. This was an entirely rational, pragmatic budget for Keir Starmer. You're Keir Starmer, you want to retain power, you want to stay in a position of authority, and the fundamental realization he had is of the last 12 prime ministers who had to fire a chancellor, none of them survived a subsequent 12 months. He has to have Rachel Reeves in power. And so this is the buying IBM of budgets. You're never fired for buying IBM. You're not getting fired for this budget. It's backloaded. There's honestly a real lack of materiality, $1 billion here, $1 billion there. It honestly is nothing in a $1.3 trillion budget. It lacks defence, it lacks energy, it lacks social welfare, triple lock. I mean, there's really not much in this, to be quite honest. I know there's mansion tax starting in 2028. Rachel, I don't think he'll be here in 2028, but, good to plan ahead. I mean, it really is a bland budget.
Ahead of the budget, you were very strong coming out against proposals, potential floated proposals around a so-called exit tax.
Yeah.
That has not come through. We do not have a broad-based wealth tax. In terms of a potential hit to high earners. We do have that mansion tax, as you say. Yeah. There's stamp duty relief, for example, on new IPOs in the UK. So there's some positives there, presumably, for the entrepreneurial scene of the UK.
I think the real positives are what she's not included, which is exactly what you said there, the exit tax and the wealth tax. And what no one talks about is the WhatsApp groups in the dark. And the WhatsApp groups in the dark are where you have multi-billionaire and multi-hundred millionaire founders who are all planning or thinking about leaving. And what I see consistently in these groups is that, in particular here, everyone was planning on leaving. And so I give them credit for listening and for being cognizant of entrepreneurial communities, because I think they did listen, and they obviously backtracked on potential plans. But I mean, there was an exodus happening if this did go through.
There was an exodus happening if this did go through. I think it's fair to say that there are a few people with their finger on the pulse, with the network that you have when it comes to entrepreneurs and founders and investors here in the UK. So what are they saying to you now? What does it mean for talent, attracting talent into the UK ecosystem?
Honestly, I don't think it changes much from where we were. I think talent will continue to go. We are in a global...
Talent will continue to leave. You're seeing that materially?
Materially. You're seeing this with founders and CEOs who are leaving for much more tax-advantageous countries. You're seeing it bluntly with people who want... We're in a global war for talent. This is what we forget. We're not in a US versus UK. We're in a US versus UK versus Dubai versus Switzerland versus Monaco, Lisbon, Milan. It is a very global war for talent. They will continue to leave. I don't think this budget really did much change that. This is not a growth budget. This isn't a budget that excites. This isn't a budget that inspires entrepreneurial communities. As I said, it's a bland budget.
If there was one policy that you could reach for, one tool that you could lever you could pull to grow this tech ecosystem in the UK, what would it be?
Listen, I think a lot of it comes down to growth funding in a lot of ways. People have talked about this a lot. Yeah. I know Matt Miller has been on before. Yeah, we do lack depth of growth funding. And the saddest thing for me is, we've been fortunate to make, in some cases, millions for our investors several times. And the money goes straight back to US institutions, which is great for our investors. I'm thrilled to have US institutions. But I would love for my grandparents to be the benefactors of that and to have UK pension funds, to have UK institutions. We need more growth capital, and that should come from...
Do you welcome the changes around the stamp duty holiday for UK IPOs? Is that going to help? Do you expect to see a ramp-up in listings in the UK? Is that going to open the floodgates?
One of the biggest founders in the UK texted me and said that it's rearranging the deck chairs on the Titanic. It's sure. That's a nice thing to do. Does that solve a problem? Not really. Do the best founders want to list in London? No. I interviewed Nick Storonsky, and on the show he said that he didn't plan to list in London. That is what matters.
The founder and CEO of Revolut, who has recently left the UK.
Yes.
Yes. How much of a red flag was that? Someone who's built a business of such scale that was recently valued this week at $75 billion US, the CEO and founder of Revolut, deciding to move domicile to the UAE?
Listen, I think it's incredibly meaningful, and I don't want to be too doomsday or too negative, but it's incredibly meaningful. And like venture capital, where a lot of the returns accrue from very few, it's exactly the same with taxes, sadly. And when you look at the potential capital gains windfall that Nick would have brought, I mean, in some cases, if you want to extrapolate that out for full him paying it all, that would be 40% of Rachel Reeves' black hole with just his gap gains tax bill.
When it comes to AI and the UK, in the context of what we're saying on the policy front, what are you most optimistic about, Harry? Where can the UK play in the AI, the so-called AI stack?
Oh my God! So there is real hope. We have great talent, and we have great talent around some incredible hubs. Whether that is, King's Cross and everything that we have with DeepMind in London, we have unbelievable young startups. Whether it's Synthesia, whether it's 11 Labs, we have great talent. I think we need a vibe change, Tom. We like to moan in the UK, and I'm probably, my mother tells me that I'm also one who likes to moan. But we do have great talent. We do have ambitious talent, and also we do have American people coming to London. And I've seen this in the last few weeks. 4 founders in the last few weeks who've come to London because you cannot get the AI talent in the US because it's too expensive and it churns, it leaves too quickly. And in London, it's cheaper and it's more loyal. And so we do have actual real benefits to building a business in London, and the talent is there. I don't think the growth funding is there. I don't always think the ambition is there necessarily, but we do have the talent.
OK, growth funding and a vibe shift. Harry Stebbings, thank you very much indeed. Of course, founder of 20VC. Jemana, back to you.
Bloomberg's Tom McKenzie talking with 20VC founder Harry Stebbings. So plenty more coming up in just a moment. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe with a couple of FX charts that I want to point out to you. The main one is the pound. The reaction to the budget was mostly positive, and this is on the back of 5 days of gains, back-to-back gains. The question is whether this is actually going to hold on. Obviously, some of the downgrades to the growth that came through, growth forecasts out of OBR in focus for investors. But for the time being, we saw a positive reaction to the pound. As for another financial indicator that we're watching, Bitcoin, and you have to wonder whether how much of this is on back of the weakness in USD versus just broader risk on sentiment that we've witnessed over the last couple of days. But so far, what we have been seeing is Bitcoin has been regaining some ground. We're back to above 90,000, despite the fact that one of the poster child funds for crypto, that is the strategy, Michael Saylor's strategy, has been on a series of declines back to back after not being included in an index. So what we are seeing is crypto stabilization. Now, the opening trade will break down the numbers with key business and political voices in its UK budget special this morning, starting at 7 a.m. London time. Some of the guest highlights include UK Shadow Chancellor Mel Stride and John Caldwell, Phones for You founder. You don't want to miss any of those conversations. But that is it for Daybreak Europe. This is Bloomberg.